So hello again, folks. Thank you so much for joining in today's workshop. My name is Tashana Johnson. I use she, her pronouns, and I'm one of the program managers with the Whole U, your well-being and engagement team for UW staff, faculty, and students. Love that you're here today. Thank you so much for joining. We are going to be learning about buying a home with down payment assistance, courtesy of Jeff Wood, a sales manager with our HomeStreet Bank Affinity program. Jeff, thank you so much for being here today. I will go ahead and have you take it away, and I will be navigating the chat box and any other tech help you need.
Okay, thank you very much, Tashana. Hi again, my name is Jeff Wood. I am a senior loan officer and sales manager at HomeStreet Bank and a part of Affinity Lending, which is part of your benefits package. And I'll talk about that towards the end. But today we're going to talk about buying a home with down payment assistance. So there's a lot of information here. We do a lot of down payment assistance programs. Not everything fits everybody's box on what to do and what to get into for a home, but there are a ton of different programs, and we do work with a lot of programs within the state. So I'm going to do a brief overview of a lot of the programs that we work with, and we don't overview everything here, but we kind of give you an idea of what it is what's out there for you and some of the things that we can help you navigate to get to and be able to use. So what we're going to talk about first is just what is down payment assistance. We're going to talk through the programs that we have, what they mean, what they do entail. Then we'll go through the recommended next steps, kind of how do I get this? How do we get started? Then we'll talk about some resources that we have here at HomeStreet and for through the university to get you in touch and involved with using down payment assistance. And then also I'll just talk about a brief overview of the Affinity benefits program that we have for all University of Washington employees. So I'm going to talk about that. And so first thing we're going to talk about is what is down payment assistance. So down payment assistance has a few different programs entailed with it. So it's not all the same. And it really depends on where you're buying the home and where you're looking. So, but most down payment assistance, and I'll use DPA a lot as an acronym for down payment assistance, and it's through affordable housing through nonprofits and state agencies. So a lot of times we work with these nonprofits and state agencies to get you into a home to help create a lower down payment, maybe a lower payment as well. So we'll go through. There's a few different types of down payment assistance. The vast majority of down payment assistance that we work with are deferred payment second mortgages. So essentially they're going to give you the down payment assistance, but it's known as a silent second. It sits there for 30 years or 15 years, however long you're going to be in that house, and has no payments typically, and some are interest free, some do have simple interest on them. So they'll sit there and you don't have to pay them back until you pay off your loan, sell the house, refinance, or do something with the house. There's the other programs we have are grants. Grants are loans that you don't have to repay as long as you occupy the home. So they have different requirements. Some require you stay in the home for a certain number of years and then forgive it fully. Some require that you are there for the lifetime of the loan. If you sell the house, a portion does have to get paid back. So it just depends on each one of the programs. Some will just sit there not earning interest, but do have to be paid back with your extra equity. Other parts that we'll see with some down payment assistance, you don't see it as much anymore, but you see a lot more habitat programs or a lot more county programs work with shared appreciation. So if a nonprofit, like one I've worked with recently in Kitsap County, they'll give you 20% for a down payment. Well, when you go to sell that house, you're going to pay back that initial 20%, and they're going to take a part of your proceeds when you sell the house of 20% of your proceeds. So if you make $100,000 on your sale, $20,000 goes to the nonprofit. They help fund their own programs that way. So you notice that when you sign your paperwork, if you have shared appreciation. It doesn't happen too much anymore with most of the programs that we work with. And the last one we'll talk about is community land trusts. So these become a little bit more popular, especially with house prices jumping up. Community land trusts are great because they keep the homes affordable for the next family that moves in. So that's always keeping the house ready for somebody to move into it. Let's say you sell the house, they will find a buyer for it. You don't go through the normal channels to sell the house. So they create the price for you. You buy it, and we'll talk about that a little bit as well. Okay, so deferred payment silent seconds, most of them through HomeStreet Bank or through the down payment assistance that you find at through Washington, is the Washington State Housing Finance Commission. The down payment assistant, it comes from the commission. They have different programs for your first mortgage. You can do a conventional, you can do VA, you can do FHA loans. So their main requirement is a 620 credit score. For most of their programs, usually FHA, VA will allow that. Conventional might require a little bit higher credit scores for their program, but it just depends on the down payment that they require. So typically FHA is a 3.5% down, VA is 0 down, and then conventional is 3% down. So they work with you with the low down payment. The down payment assistance can help cover some of that portion of the closing costs or down payment, and then you come in with the rest. It doesn't always cover the entire down payment, but it can help with the process. So the amount of down payment assistance also varies per county and per state, depending on where you're buying in Washington. And then the DPA is a second mortgage that is paid back. But again, most of them are deferred. Some have a 1% interest rate, some have a 3% interest rate. Really depends on the program that you have. We have one that has a 0% interest rate that, again, it's so nothing accrues on it. You just pay that total back when you sell the house. So you'd want to contact your loan officer for more details on that program. This gives you an idea of the down payment assistance program for a sales price of $450,000 with a 30-year fixed loan. Your loan amount is going to be $436,500. The down payment required is $13,500. So with Home Advantage, that's one of the programs that we work with. They'll give you up to 4% of your loan amount towards your closing costs. So 4% of your loan amount with Home Advantage is $17,460. So you notice that will cover up almost all of the down payment required, and it also gives you about $39.60 towards your closing costs. So with the Home Advantage program, it does help quite a bit with the sales price of the house, with the down payment assistance and getting into the house. So that does help. The rates right now are not great, but it is a program that is here every year. So rates might not be the greatest right now, but they do cycle. So they can't, once they go up, they do go down as well. So, but we can always keep you informed on what the programs are and what is available to you out there. The next part is grants. So the main one that we have with HomeStreet is the Federal Home Loan Bank grant. It's called a Home Start grant. It's a matching program. So every dollar you put away, they match it up to $5. So if you put away $1,000, they'll match it up to $5,000 up. And actually the max now is $7,500. I forgot they did increase it up to $7,500. So they'll match your money up to $7,500. And what's nice about these programs is once they give you the money for the down payment, it goes into your down payment or closing costs. It can be used for any of the down payment or for your closing costs. So if you have your down payment covered, like in the last scenario, you can use the rest for closing costs or increase the down payment as well. So you could use the whole thing. So that money will sit in escrow. It'll count as your money when you go to close. And then with this program, it's forgiven at 1/5 per year. So if you stay in the house for 5 years, you don't owe anything on that grant anymore. After 5 years, it's gone. If you sell in 2 years, you have to pay 3/5 of it back. So they have different requirements on that. We do get some depending on the market. There's other programs out there that are similar in grant money, but that's case by case. If we get them right now, we don't have any other funds for grant money that's available, but you've seen some that you'll hear LIFT. That's a program that we're given funds for down payment just to help kind of spur home buying process out there for first-time home buyers. Next part is a community land trust. Did I skip? I think that's right. Okay, sorry about that. The next part's a community land trust. So community land trust is becoming a little bit more mainstream with a lot of purchases and with first-time home buyers. It allows you to buy the house, but you actually rent the land that the house is sitting on. So you're actually you own the house, but the land is owned by the land trust. So the value of the house can be kept low because you're not paying for all of the price of the land into the project. It's more affordable. Again, you're not buying the land. It's typically a lease that's 99 years or longer. So it is a renewable lease. We have about 27 in Washington State. I work with 2 here in the Seattle, Bainbridge Island area, but there's quite a few within Washington that we work with that can be worked with. I just work with those 2 primarily. And then the next part is the homeowners agree to sell the home at a restricted price in the future. So that sales price is determined by the land trust and not by realtors, not by the market when they go to sell. So you do get appreciation in the market. Typically they keep it about 7% of what you paid to kind of keep it affordable for the next family. And they have to qualify as the same way that you qualified for, typically 80% median income of that area. So we'll go on to the next part. This kind of talks about how community land trust works based with a standard purchase price. So with a home value of $425 with the land trust, the leasehold, they'll knock $150,000 off the price. You're actually buying the house with $275,000 is your loan. That $150 stays with the property. And then so your loan amount is $275. Typically they have you bring in 1% or $2,500, which is ever greater. So in this case, you would have to come in with $2,700, $2,750 of your own funds into the transaction, which would cover some closing costs. And then you don't have anything else because the down payment's pretty much covered with the land trust, as opposed to standard home value with a $425 purchase price, loan amount with the down payment of $12,750. You have to come in with that and pay your closing costs. So it can help bring your payment down quite a bit as well, having that lower loan amount at $275 as opposed to $412,000 loan amount. Okay, so there's additional requirements for most down payment assistance. So again, it's based on income, geographic restrictions. It depends on what county or city that you're living in. Some other down payment requirements. They work with veterans. They work with persons with disabilities. We have customers that if they have children with disability. Let's see, some of the other programs that we've worked with is just, most of them are income driven. The educational requirements, some have 5-hour class requirements. Others might have 5 to 8-hour class requirements. So we try and direct you through that. They also have some one-on-one counseling that you have to go through with a nonprofit to be able to go through the process with some of the down payment assistance programs we have. And the other thing is with a lot of the fundings that we have, the program might be limited with the amount of funding they have. So like HomeStart, the down payment assistant grants that we get for $7,500, a lot of times they don't get new money until April 1st of every year. And because it's free money or grant money, it goes quickly. It goes very quickly. And then they open it up again in October, and then it goes quickly again. So that $7,500 grant's a great program. We have to get you qualified for it, and you have up to 2 years to use that $7,500. But that once those funds are gone, we have to wait for the next funding requirement. And sometimes with the down payment assistance program, some cities, like the city of Seattle or city of Tacoma, kick in money for down payment assistance, they run out of funds as well. So they have to go back and get more funds to start the program over again. So just keep in touch with the loan officer, talk to them, figure out what kind of process you're looking at for buying your house. So now that we kind of glossed over the down payment assistance, again, everybody is different with down payment assistance. So not everyone qualifies for the same program. So that's the one thing you got to keep in mind. If it's something you're interested in, we can break it down more on an individual basis afterwards in a one-on-one situation. But the next steps, so once you've decided, okay, I want to buy a home, what do I need to do? So the next thing you want to do is create a budget. You want to educate your current spending versus your income. You want to adjust for taxes. You got to look at your needs and your wants, get a plan set up. There's a lot of different ways to set up your plan. There's mint.com. There's about 19 to 20 different online resources that you can go on and do a budget. You could do Quicken, QuickBooks, a lot of different programs that you can go in and work with. It'll kind of work with what your budget is and how you're set up with your family. So get the entire family set up, figure out what your budgets are, get your needs and your wants. Don't forget, if you have a vacation scheduled every year that you go to, put that in there, divide that out for 12 by 12 months. If you have movie night or you go out to dinner once a week or once a month, get that included in your budget. Because when you figure out how much you want to pay for a home loan, you want to make sure you're still living a normal life as well. You don't want to be house poor. So you don't want to stretch it so far that you're paying every single dime to your house payment and you can't live life normally. A lot of times that leads to resentment in the house, or let's say more credit card bills. Maybe you're putting more things on your credit card than you used to because you're out of your budget a little bit. So get that budget in line. That's the main thing. The next part is, once you have the budget set up, get your savings goal. What I like to do is talk to a customer and first and say, okay, how much are you paying in rent? Let's say you're paying $2,000 in rent and you want to pay $2,500 on a new mortgage. Well, say you're already paying that $2,000 a month for rent. Take that extra $500 that you think that you'd pay for a mortgage and put that in savings. If you can get by without touching that $500 every month, you'll build up your savings plan, and you'll know, okay, $2,500 makes sense for our family. We can afford to live every month with a $2,500 mortgage. So you set your savings goal, you build that up. So in that case, you're doing $500 a month, $6,000 a year, helps build up the savings. Give yourself time to save the money. You can't just suddenly, oh, here's 10,000, here's 10,000. It's not realistic if you're really stretching to get that savings built up. And then what you want to do is figure out how much you want to save per month, and just see again if you're living normally without running up credit card debt. And again, what I was talking about, the difference between your mortgage payment, your future mortgage payment, and your rent is payment shock. So it's a sharp increase in your housing expenses, because again, you're also going to have utilities that you got to cover. You got your water, sewer, garbage, gas, different things that come to play that you might not be paying as a renter at the moment. So keep those in mind when you're setting up your goals, your savings goals. Next part is take advantage of the financial education. So we have a bunch of financial education classes. We do a lot of these classes for the U as well. But we also do online first-time homebuyer education classes where you can learn about buying a home. They have some other ones that we can send links to that will teach you about how for the home buying process as well. So just kind of get informed, talk to a loan officer, find out the best way to get started. Next part is get pre-approved or pre-qualified. So what we want to do is apply for a loan. So if you're 3 months to 4 months out, applying for the home loan might make sense. If you're more 6 months to a year out or even further, maybe just sitting down and kind of crunching numbers is a great way of doing it without pulling credit. So if it's 6 months to a year, check with the loan officer, talk to them, give them how much you have in debt, payments per month. So credit cards, car loans, student loans, what you pay per month. Even if your student loan has 0 payment on it, we're going to count at least 1%. So if you have an income-based repayment, we like to see that. It's better than 1% in most cases. We want to see how much your gross income is. Gross income is before taxes. And then a lot of times, how much do you have in savings built up? And so we kind of crunch those numbers to figure out, okay, here's your mortgage payment, here's your rent payment that you've been paying. So we use the $2,000 for your rent, $2,500 for your mortgage. Here's the $2,500. This is what it would buy you with this credit score, or just kind of estimating your credit score. So we kind of give you an idea, 6 months to a year. But getting pre-approved or pre-qualified, what we do is kind of the same thing, but we collect your pay stubs, bank statements, pull your credit, and we act as if you're getting pre-approved for a home, even though we don't have a home yet. So that's kind of the process to get you started. Again, it's usually 3 to 4 months out from when you want to get pre-approved. Next part is make sure you have all the required documentation requested by your loan officer. We typically need pay stubs for all borrowers for 2 months, or for 1 month, 2 months for teachers, recent bank statements, investment accounts for 2 months. Again, it's for the money, where you're getting the money from for the down payment. or if it's for reserves. So let's say you have your down payment covered with the down payment assistance. They may want to see 2 or 6 months of your mortgage payment in savings or in retirement to fall back on if an emergency happens. So they may ask for those accounts just to have reserves tied up so you can always fall back on those if you need to. Then we also do W-2s for all borrowers for the last 2 years. If you're self-employed, we typically like 2 years of complete tax returns with a year-to-date profit and loss. So like right now, we get a 10-month year-to-date profit and loss with your 2 years tax returns. Okay, next, once you do get pre-approved and you want to start getting out there and looking, what we do is we go ahead and get you out there looking with homes. Talk to your realtors. Realtors are great resources to go out and find houses, even though, yes, we can go online. You can look at a lot of MLS sites and pull up houses left and right and see the houses out there for sale. The realtor is the one that you want to talk to because they can help you show the houses. They can help you negotiate with the buyers, with the sellers, and get into the home. So talk with them, interview them. You want to make sure you trust them as much as you trust your loan officer, so you know that they're looking on your best interest. With real estate agents, just keep in mind it takes 60 clock hours to become a real estate agent. Find out how long they've been in the business, how long they've been negotiating deals, if they do it full time. Just kind of review them just as much as you review your loan officer. If you don't have an agent, we do have options where if you talk with us, it's part of your benefits package as well. They give up a certain percentage of their commission towards your closing costs as well. So if you don't have somebody in mind. Okay, next part, find a home, make an offer. So the real estate agent will sit down. It's about an 18-page report or 18-page offer. You'll sit there and fill out all the documents with your real estate agent, and they'll make a offer on your behalf and negotiating terms and conditions. So there's a lot of different things that go into a purchase and sale, and they'll walk you through that. So giving a pre-qualification letter can get a buying edge over other buyers, especially in this market. It's starting to get a little bit more open, less offers on houses. So getting pre-approved or pre-qualified does help in the process. Okay, next part, ordering a home inspection. This is a requirement for almost all down payment assistance. So having a home inspection and paying for a home inspection is typically required. Now, this is for your peace of mind to make sure the house is in good working order. So when you go to buy the house, you know, okay, this is things to look out for, what to maintain. So neglect or anything will certainly cause something down the road. So if you keep up on something, or your furnaces and just keeping water out of the house, a lot of times a home inspector will tell you you need to do this or this, and keep the upkeep of the home will be a lot easier. Once your home inspection is done, notifies your loan officer. That's when we know you're ready to go forward. We take the purchase and sale agreement, we order your appraisal, we move forward with the loan and get you into that home in the next 30 to 40 days. So that's when we get the purchase and sale agreement. And then the last thing, I don't think I skipped 2 there, did I? No. So once we have the appraisal, the next part is shopping for homeowners insurance. So just like car insurance, homeowners insurance is a great time to shop for new insurance at the time, mainly because they like you to bundle HomeStreet insurance, or regular insurance with your car insurance. If you bundle, a lot of times you can save with your car and home at the same time. So it's a great time to check out what your insurance will do for your car and your home. Okay, next part, with the home inspection, I kind of talked about this. I usually do it a little bit more in advance, but we order the appraisal once the home inspection comes through. And then once the appraisal comes back, we have all your documents and final approval. We get you ready to sign and closing of your loan. So typically, let's say today's the 8th of November. Your closing date's 11/16, or what's next Tuesday. Typically, you're going to sign your paperwork on Monday the 15th and close on the 16th. So you sign the day before your closing. That's your signing date. Closing date is the date that you actually get your keys. So you'll need to have the money, the difference of your money at closing or at your signing. And so they'll have it a day before if it's a cashier's check or wired money directly to escrow. They usually want it a day beforehand. So they'll have that, and then escrow will disperse the funds and you'll become the homeowner that evening. typically. So make sure they don't take cash, they take cashier's checks or money or cashier's checks or wire transfers. Typically, they're not going to take personal checks. So keep that in mind. Have the money move to the account that you need to after the bank has documented your funds. So so that's kind of the process of getting through the home and buying it, just kind of quickly. But here's some resources that we have. American Financial Solutions, they're a nonprofit that we work with. You can find them at My Financial Goals. They work with credit repair. They work with consumer credit counseling, budgeting. They can help you with, once you're in the home, they can help you with foreclosure prevention. They talk with your lenders. They also help with bankruptcies, bankruptcy protection. So they have some different avenues to work with, and it's a great local company that we work with. Next is Fannie Mae. You can look on most of the investors that we work with. Fannie Mae is one of them. They do conventional loans. You can read about the different programs that they offer at Fannie Mae. The Federal Housing Administration, FHA, is another great program. We do a lot of first-time homebuyer loans with FHA.gov. Freddie Mac is also a secondary investor that we use for conventional loans. And then HomePath is a site where homepath.com are properties owned by Fannie Mae. So they're foreclosed on properties. This was a big resource to use back probably like 2010, 2011, quite a bit. So, but HomePath, they do list foreclosures that they have on their website. HomeStreet Bank Affinity Lending Program. You can just go to homestreet.com benefits and just learn about our lunch and learns, our down payment assistance programs, reduce closing costs. Next is a HUD Housing Urban Development. They talk about different resources that they have with their program. If you're buying in a rural area, we have USDA. So some counties have USDA loans available in a lot of their areas if it's in a rural community. And then if you're a veteran, they also have VA loans, zero down for veterans to get into their first home. So we do offer those as well. Okay, and then just a quick synopsis of our program with Affinity benefits. Cost savings, that's the main thing that we can help with cost savings. We're a non-commissioned loan officer. So on I think the example before was let's say a $400,000 loan amount, you'll get a $2,000 credit from us as a loan officer. With our contributing realtors, let's say it was a $500,000 purchase, they can contribute $2,500 to $5,000 of their commission towards your closing costs. So in that example, it's about a $4,500 to $7,000 in closing cost discount from us and our realtor partners. Down payment assistance programs, there's a few of us here at HomeStreet that work with this program on a regular basis. So if you're talking to someone about down payment assistance, make sure it's somebody that's done this for quite some time. Other financial fitness tools, we do have some other programs that talk about budgeting, steps to homeownership, again, like down payment assistance like this one. And then American Financial Solutions is also another program that we work with for helping you get into the house or fixing your credit report. The other great benefit of this program, it's immediate family members. So your parents or your children can also get the same benefits that you receive. And again, exclusive access through Affinity benefits. You want to go through one of the loan officers at HomeStreet that's on the Affinity benefits page. So it's myself and 3 others here at HomeStreet Bank. We have about 70 loan officers at HomeStreet. There's about 20 of us that work with Affinity discounts, 4 of us in the Seattle area. So keep in mind, talk to me. There's Nancy, Jessica, and Ryan that all work on these programs. So if you have any questions, I'm happy to answer those now. But if you want something kind of offsite, my information here, again, I'm a sales manager with Affinity Lending. My direct line is 206-264-4262 or just jeff.wood@homestreet.com. So thank you for attending today. I appreciate staying here through the program. And again, I'm happy to answer any questions.
Thank you so much, Jeff. And folks, as a reminder, you're welcome to drop questions into the chat to all attendees or to ourselves individually. Jeff, a question that's come up was, can you repeat the credit score options attached to buying a home through some of the different programs that you referred to?
So most of the program, So most of the down payment programs, you at least need a 620 credit score or higher. So what we do is we pull a credit score, tri-merge. So we have all three bureaus, and we'll take the middle credit score of the lowest borrower. So if you have just yourself, and let's say you have a 600, 640 and a 660 credit score, we take the 640. Now, if you and your partner are buying a home and you have 750 and they have 650 as their middle score, we use the 650. So it really depends on how you're applying. Most programs, if you don't use down payment assistance, that 620 isn't a hard line. So FHA and VA, we can go as low as 580. USDA usually is 640. Conventional loans say they can go to 620, but they're usually approving 680 and higher. So it's hard to just judge because I've seen some approvals come back with 600 for conventional, even though they say 620 is their hard line in the sand that they can't approve. So, but typically, if it's on the lower end scale of between 580 to 620, USDA won't do it, but VA and FHA will do that.
Great. And a follow-up question there. Are you saying that there can be two applicants on one? Sorry, I'm trying to get that. Are you saying that there can be two applicants on one application for assistance?
Yes, and so you can have you can have up to 4 applicants on most applications. If you're doing down payment assistance, they all have to be first-time home buyers. So that's kind of tricky when you have somebody who wants to co-sign. We can't use down payment assistance if you have a co-signer, somebody that's already owned a home or owns a home currently. Now we do have Home Advantage where you don't have to be a first-time home buyer. You can be a previous homeowner with Home Advantage. It's a decent program for down payment assistance. Right now the rate's not too attractive, but it's available if you need help with down payment assistance and you've owned a home in the last 3 years. So to be a first-time home buyer, you can't have owned a home or been on title in the last 3 years. Now, if you've been displaced, let's say you're a displaced homeowner, let's say you were divorced 3 years ago or 2 years ago, and you have not been on that home or made payments, they can make exceptions if you're a displaced homeowner to get down payment assistance. I do have some customers that's happened to.
Thank you so much for that info, Jeff. Back to a question that's come up. Can the benefit be used by immediate family members in another state?
We lend in 10 states. And so Alaska, Hawaii, Washington, Oregon, California, Arizona, Nevada, Utah, and Idaho, and Colorado. Those are our main states that we do lend in.
Wonderful. And I think you mentioned this earlier, but if not, as a refresher, do you have programs for land purchases?
We do not. Actually, we learned at the benefits fair that we just attended at UW. BECU has a lot loan. So they have a 30% down and a 50% down for land loans. But they don't do the construction loan. So we do a construction loan here at HomeStreet. So a lot of times you can go there for the lot loan and come back to us for the construction loan and get the discounts from us after you bought the lot loan. So that is an option. We just actually learned that 2 weeks ago.
All right, we're all learners. All right, a few more questions have come in. Folks,
Sure.
I will answer this. The slides will be emailed. And we are recording, and we'll be able to share that recording as well with anyone that has registered for today's seminar. Back to our chat. Do married home buyers both have to be on the loan?
Not always. So if you're buying if you use a conventional loan, you can have you can have one spouse on and not the other. And it's fine. You can buy as long as you qualify on your own, you're fine. With FHA, VA loans, if you're married, they're going to pull your spouse's credit. So if they're not on the loan, they're still going to count your spouse's marital debt against you. So you have to qualify for actually USDA does it too. So VA, FHA, and USDA will pull the other spouse's credit, and you have to qualify with your credit and the spouse's credit with solely your income. They don't take into the count the credit score, but they do take into the count the debt. So I've had customers that didn't want to apply with a FHA loan because their spouse had really bad credit. Well, I still had to count the credit against them. But if they would have went conventional, I don't have to count it. So it's kind of tough to kind of go that to say if they have to or not. But I've had a lot of customers that don't apply with both. But typically you want it on a conventional loan if you go that route. And also with the VA, you have to be married to the veteran. The veteran has to be on the loan first, and then the spouse or partner has to be. They can be on the loan as long as they're married. VA won't allow it if they're not married. They can't be on the loan at all. That's one kind of weird one with VA. It's a little bit different. I think they're slowly changing that, but I believe. I don't know if domestic partnership works with VA yet. I don't think I've come across that yet, so I'd have to look that up.
Thank you so much for that info. Does the HomeStreet Bank Affinity program cover purchasing foreclosures and prefab or manufactured homes?
Yes, it covers foreclosures because typically foreclosures are going to be tied into with a real estate company. They're going to be selling the foreclosure, so we can work on them. If it's something that's not, let's say it's not lendable because the house is in disrepair, we do have programs like a Fannie Mae Home Style or an FHA 203K rehab loan, where you can buy the house and do a rehab loan on it. And so you can wrap the funds for building into the purchase and complete the fixing of the house before you even move into it, but you own it and then you fix it up. But we hold the funds in escrow to fix it up before you move into it. So there's different programs for that as well.
Okay, and related to that question, and I'm sorry if you already worded this, but or if I missed it, does the construction loan have to be with the residential home builder, or can we build the home ourselves?
Typically, they're stricter with self-help. If you're going to do the building, you have to provide a resume of why you can build a house. We have to look at your resume and what you do for a living, mainly because not everybody has the know-how of building, but they have their other job. So they want to know, okay, what's your background? What are you doing in order to get the house built? And how are you going to pay for it if you're going to be building the house and not have your regular 9-to-5 job? So they're really strict on self-help. Typically getting a general contractor and having that person go forward and do all the work, even if they let you go in and do some work or do a lot of the building, you would have to have that conversation with the general contractor. I've had customers do it, but typically we just say get a general contractor is the easiest way to do it and have them work it. If you are your own general contractor and you sub it out, there's ways of working on that as well. I've done that too. So it gets a little bit more involved.
Wonderful. Thanks for getting into the nitty-gritty with us. Given that 1 month of pay stubs is required and 2 years of W-2s are required, which carries more weight? For example, if you've recently transitioned into a new job that pays more but have lower W-2s, does that mean you qualify for less?
We look at current income, unless it's something, let's say you were working for ABC Manufacturing and you were building widgets on the assembly line, and now you're a computer programmer at the U. That's a big difference and jump. But if you went to school to become the computer programmer as you are working and you have that job history, we take the job history also and the schooling and show that you improved yourself as you went through it. Now, if it's something where you've gone through and it was the same line of work and you've gone through and just bettered yourself at the same employer, Let's say you've moved on up and now you're getting paid better. We actually use your current income, and the rest is just work history to show that, yes, you've worked at this job for 2 years. We don't look at the income for the last 2 years and average it. We look at your current pay stub and go off of that current income, as long as you have a 2-year track record of that job. The other thing we do, though, is if you are self-employed, we will take a 2-year average of that, the last 2 years tax returns. So that's something a little bit different with self-employed buyers. We do take those 2 years tax returns and use those for future income. So.
Thank you so much for that, Jeff. And thank you all for the thoughtful questions you're dropping into the chat. Jeff, can you revisit or kind of go back over the benefits for home purchase that you all provide?
So the benefit for the monetary benefit is typically half a point towards closing costs. So again, on a $400,000 loan, that's $2,000 from HomeStreet towards your closing costs. And if it's a $500,000 purchase price, the commission from the realtor can be anywhere from a half point to a point, depending on what the seller is contributing. So that could be 2,500 up to 5,000. So you're looking at about 4,500 to 7,000 in down payment or in assistance with your closing costs from the realtor and from our loan officer. So that's the monetary side of it. And then with the pre-approvals, we help with pre-approvals, down payment assistance, just different parts of the program that will help you get you through for buying a house.
Great. And someone asked, what are closing costs?
So closing costs are typically, there's different things that roll into a closing cost of a loan. You'll see appraisal fees, which are usually about $700. Credit, we check your credit. So there's a credit report fee. Title and escrow. They're going to be your title report to make sure that the title's clear when you buy the house. That could be anywhere from $600 to $1,200. The escrow fee is the third party from that signs your paperwork, and they disperse the funds for the seller and the buyer. They collect all the signatures. They will they charge, usually they split the fee. So let's say it's $2,000 for the purchase. 1,000 goes to seller, 1,000 goes to the buyer, plus tax. And so that's one of the main fees. We check every house gets a flood zone check to make sure if you're in a flood zone or not. That's $11 from us. It's different per bank. Let's see, credit report, appraisal, recording fees with the county. They're usually about $400 to $500 for the county to record the deed. So you're now the owner of the property. So those are the hard closing costs. We do have a funding fee that we charge about $11.95, basically $1,200 for the funding fee from HomeStreet. So those are closing costs. And then we have prepaids, which is your property taxes and your property insurance. We collect 15 months of property insurance, and we usually collect about 6 months of property taxes to be paid at later times within the year. For your mortgage. So those are all the kind of closing costs tied together. You could probably average about 7,000 to 9,000 in closing costs, depending on the size of the property and the taxes and the insurances that are being collected.
Wonderful. And I have a couple of questions coming in at once.
Sure.
Can we go back to the purchasing of prefab and manufactured homes?
So on prefab, we don't really have a program for prefabbed housing. We do for manufactured. So if you have a manufactured home and it's put on site, we typically can finance it. Most manufactured housing that's brand new is bought at a manufactured home dealer. So they'll work with you on the land home package in most cases. We don't tend to do that within the bank. We typically tend to lend on manufactured housing once it's already there. So once it's on the property, we can finance it. We don't typically do the build or the move on to property and put it on property. The dealers usually have lenders for that. That's one thing we don't do. With construction loans, it's a case by case with prefab housing. If we can do it, I've gotten one approved in my 21 years here. they built the walls in another state and brought them here. We don't do those that often. Why we did that one is because the customer prepaid for the walls ahead of time. So we didn't have to worry about the material because we don't pay for the material until it's installed. And so we didn't give them any money to build the house until those panels were installed. So there's kind of a little difference. Like kit homes, we can't do kit homes because what they want is all the money up front for the lumber drop, but it's not being installed, so we can't pay for it. Construction loans, we have to have it installed before we can reimburse the builder for it. So that's one thing about construction loans. It's a little bit different. So why we don't do a lot of prefab or construction, prefab constructed homes that they bring in from other places.
Okay, great. And I'm personally resonating with this next question.
Okay.
Do home loan officers judge your spending that they see on your bank account? I get this so much.
yeah.
I understand. Great question.
I'm not one to talk. I look at my spending, and my wife's a CPA, so she tells me what to do sometimes and to stop spending. But no, we don't look at spending habits. What we like to do though is try and educate the buyer and just say, okay, we need to do this for getting your savings built up. Let's dial back this and maybe put more in savings. So there's things we can educate you on. I mean, I've had customers that I've pulled up bank accounts, they've had the money for down payment and stuff, but you notice that, okay, they eat out every single night. It's like, wow, that's a lot of money they could be saving if they cooked. But you don't know, you can't really judge somebody based on their spending habits. Maybe that's what they do part of their job, or maybe they're out and about every night. So there's different things with every single person that you see. But most of the time I look to make sure they have the money in the checking for the down payment, and the credit and credit scores are basically within line within the program, and there's not too much debt. So for us, we're mostly looking at, let's get them qualified, because if we can't get you qualified, we don't have a loan. And so we get paid more for bringing in loans than sitting there and denying them. So we don't want customers getting denied. We try and get every loan approved. Sometimes it may take a different program than over another one to get somebody approved. So.
Thank you so much for that. Let's offer some clarification on when or how early folks should be having conversations with a loan officer. Will the loan officer help find down payment assistance programs they might qualify for?
We can. It really depends on your motivation on getting to the house, because there's a give and take. So if you get down payment assistance, you might not want it if you have your own down payment, because you might get a better rate if you bring your own money in. If you bring in down payment assistance, the rate might be higher and you could buy less. So if you have a lower rate and you have your down payment, you might be able to get in now with a bigger house price or a larger house price and a smaller payment. So there's give and take with both ways. So you want to look at the different options and see, okay, does this make sense to do? Or using my own money or my family's, let's say you get a gift from a family member. We do accept gifts in most cases with down payment, or instead of down payment assistance, if you have funds or availability of getting gift funds. And you don't have to have the gift funds now, you can get them later. So there's different criteria for that as well.
Can you go back to and speak more to gift funds for purchasing and how that works with down payment assistance?
So typically, every program is a little bit different with gift funds. So if you're bringing in 5%, typically you need to bring 5% of your own funds. But if you're bringing in 10%, 5% has to be your own. So there's different rules to gift funds. If you have somebody coming in with, let's say you have a family member that's giving you 20% down, we can take that. You don't have to have your own money down. But if it's less, let's say it's 3 or 5% down, you have to have your own money for down payment, for the down payment. With the gift, even with down payment assistance, they're going to require you to bring in your own funds before you get any gift funds. So again, it's a case by case, but typically if you're getting gift funds, you probably don't want to use down payment assistance, because you could probably get a better rate using gift funds. But we want to see it as a gift, even though IRS code and all that, we don't report the gift. We just want to see a gifts coming in and no repayments needed. With tax code and stuff, I have customers that break it all down to their 15,000 per family member per child, and that's something we don't report, but it is something that your CPA may advise on. So, and that's where you want to just check with your CPA or your financial advisor on gift funds and what's allowed and what's not for your own family's protection. But for down payment assistance or for down payment, we can usually accept it if it's a larger down payment. If it's, like I said, 3 or 5%, typically they're going to want to see that 3 or 5% coming from you first, and then anything on top of that can be gift funds. But again, it's case by case with every borrower with how much they're getting and how much they're putting down.
Wonderful. One more question. I heard that there were grants for BIPOC folks, Black, Indigenous, people of color folks, to purchase homes. Do you know anything about that or have any details about that?
I don't. I know there's different programs out there. I know there's like the FHA has a program for Native Americans. We do not have that at HomeStreet. It's an FHA 184. We do have it for Native Hawaiians in Hawaii but I don't do those loans. I know we have those for some of the Hawaiian loan officers that we have within HomeStreet, but they do the Hawaiian homeland loans. I'm not familiar with the program the question was on though. But I know there are some different organizations I can probably put them in touch with, like HomeSite might be a great resource. It's homesitelaw.gov, I believe, or .org. I'd have to look. But HomeSite, you just Google HomeSite Washington, and they'll pop up. One of our former employees from our Queen Anne branch, I'm blanking on his name. It starts with an M, but he's very. That's kind of his goal, is helping his community in Seattle, helping the community through HomeSite. What's his name? If you don't mind, I can look real quick. Let's see, Ali's with Habitat. Let's see. And actually, if they want, they can always contact me. I can put them in contact with them. And I don't have it handy. Let me see. Oh, teammates right here. Musa Som. He's at HomeSite. But he used to work at our Queen Anne branch for HomeStreet for 15 years. But that's part of his kind of focus right now, working at HomeSite, is getting those of color into homes, especially in the Seattle area. And so it's a great product or a program that they're working with at HomeSite. And they have their own down payment assistance as well. So that's another one that we don't do because they're their own lender. So with HomeSite, they do some of their own down payment assistance, which is a great program. So
great information, Jeff. Thank you. One more question.
Sure.
Is private mortgage insurance required as part of DPA programs?
It is, yes. Unless you're getting 20% down from, like with the community land trusts that we talk about, most of those will not have private mortgage insurance because they are being sold. They're being sold at a lower value, but their value is a lot higher. So we're basing your loan amount and the actual market value of the property. So even though they're selling it for 475, it's probably worth 600, and you're getting the benefit of, okay, this is a $600,000 property and I have a $200,000 loan on it. I don't have mortgage insurance. But if you're doing a 3% or a 5% or 3.5% down payment assistance programs, it will have private mortgage insurance on it. For FHA loans, it's on there for life. So you have to refinance out of FHA loan to get rid of mortgage insurance. Conventional loans typically can drop off after 2 years with appreciation and a new appraisal. So there's different ways of removing mortgage insurance. But yes, it's typically on most down payment assistance. The city of Seattle has a $55,000 assistance program that used to be enough for 20% down. We're finding with the values, it hasn't been enough for 20% down. So you may have mortgage insurance, with those programs. But most of them do, because we can't get 20% down with most of our down payment assistance programs.
Wonderful. Thank you so much, Jeff. And thank you all again for sending in such great questions. I'm not seeing any more pop in, but I am seeing some appreciation for you today, Jeff, for sharing such helpful information and getting to folks' questions. I'll leave space for another moment for anyone to drop in a question. Otherwise, we will wrap up.
Okay. And again, my information's there. If you want to shoot quick email to me or a text, that's fine. The direct line's not my text number. If you email me, that's probably the quickest way to get to me. I just thought about that's a landline.
We still have those. Yes, we do. Okay, awesome. Thank you so much.
It's somewhere in Seattle, I know, but
Thank you so much.